Well, that kind of brings up this whole idea in my mind of like, hey, what are the expectations and what is reality? And I know you have a little bit different process than, especially since you just described what happened for one of your clients with another lender. If you could kind of set the expectations, if I were coming in as a brand new potential client, my wife and I are thinking about buying a home, and we just meet you for the first time, kind of take a second and walk through what you do with us to help us move along that path.
Yeah, good question. In fact, I actually have, as it turns out, and you don't even know this, I have a prospective home buyer, a married couple, and their small child, their toddler. They're going to be here in my office at 4:00 today. And they're coming to see me to talk about they're interested in buying a home. And so one of the things I always do, and I'm going to start with them as well, is when I meet with them, I'm going to ask them some very basic questions. What is the price level that you would like to buy at? You don't know yet if you can qualify, but if you had your wish, what price level would you like to buy? Is it 500,000, 600,000, 700,000? What is it? The other question I'm going to ask is, how much do you have in the way of down payment funds? Give me some idea what you have available or not available, so that I can understand what they can do in that respect. And then the other thing I'm going to ask them is the property type, whether it's going to be a single family home or a condo. That's important because that does affect how the loan is priced when we're talking about a condo with less than 25% down. And then the last thing I'm going to ask them is, give me an idea what you think your credit score is going to be. And the point of doing that is, one of the things I've noticed in the industry for years is how many people get with a lender, and they may even be persuaded to submit an application to a lender before they find out any specific terms that might be available to them. Some lenders, particularly larger ones and bank lenders, they'll make the argument that, I'm sorry, I can't give you any kind of written estimate until you submit an application and I collect 6 pieces of documentation, including income and assets and so forth, and pull your credit before I can give you a loan estimate. Now, a loan estimate in the last few years is an official disclosure document created by the CFPB. We call it an LE. So if you go to a major bank and you want an estimate of what the terms are going to be, they'll say, sorry, I can't give you anything in writing. You got to apply. I got to get all your documentation. I got to pull your credit, and then we'll give you an LE.
Wow.
See, I don't like that. I've never liked that. I don't think it's necessary. So by asking those questions I just mentioned, I can at least start off with providing a written, detailed, it's not a loan estimate or LE. It's not an official disclosure document. It's called a closing cost worksheet. And right at the header, it'll say, this is not a loan estimate, and urging the borrower to get one from whatever originator they're talking to. But in the meantime, it gives the borrower tangible, real numbers, including an APR, annual percentage rate for the rate quoted. And I'll explain to them, look, this is not an official LE, but based on the parameters you gave me, this is what's possible. So you have a good idea going in what kind of terms you're going to get in terms of total closing costs, down payment amount, interest rate, monthly payment. So you see that up front. So in my mind, what you're getting is you're getting the potential price of your transaction even before I take your application and then determine if you can qualify, and then maybe get your file registered with a lender and get the official LE. I think that's very important. I think it gives people the information they need to understand, number one, are they realistic about their home buying goals? Or with my help, do we need to adjust those goals in terms of maybe a lower price, a different property type, tweaking the down payment, getting a closing cost credit from the seller, and so forth. So I think that's something that we do that's pretty unique in the industry.
Well, it kind of makes me think, I had this vision of me walking onto a car lot with my wife, and none of the cars have prices on them.
Right.
How can I make a decision if I don't even know how much the automobiles are? And in your case, it's like, how can you or me, this couple coming in, how can they make any kind of a decision until they kind of have an idea what they can truly afford based on those few questions that you ask them?
Well, exactly right. And that's what I say is I've encountered people, prospective buyers, borrowers, countless times who've started with another lender. Maybe they got unhappy. Maybe there's some trouble getting them qualified and so forth. And one of the first things I say is, did you officially apply for a loan? Well, yeah, we did. Well, did you get any kind of written, disclosure, whether it's the actual LE or some sort of closing cost worksheet up front, so you kind of had an idea what kind of terms you're applying for? You'd be surprised how many times people say, well, no, we had some verbal discussion, but I never saw any written numbers. And that's what I think is so unfortunate in our industry, is that I think you should get that kind of information up front. Now, of course, I have to provide, and I'll do this at 4:00. Look, this is based on what you would like to have. So understand that once I get your information and go through the qualification process, these terms may change. If I pull your credit, you told me you had a 780 credit score. I pull your credit and it's 665. Well, just understand that's going to change the rate. And if you decide that you don't want a single family home and you got to go the condo route and you're going to put 10% down, understand that could change the rate. So I make sure that they understand those things can affect what I'm initially showing them, but I think it's important to show them, at least initially, what kind of terms may be possible.
Well, I think this is important from a standpoint for people out there who maybe are in that process, like this young couple coming in, or this couple coming in at 4:00, is what can you expect to happen when you go there? And if it's going there to any other lender besides you, and I'm not saying all the lenders don't do what you do, but as you say, it's pretty unique. And I walk in, and when I leave there, I still have a lot of questions that have not been answered. And I have no document to say, Jeff, you and your wife can do this, and this is an explanation. And, it could change upon further, but at least I have a ballpark of where we're at.
Well, right. And that's the whole idea, is give them an initial ballpark. And as to your comment, it's not like there aren't other originators that do what we do in terms of providing that up front. I just don't think is as commonplace as it should be. And so the idea is we're going to give them that initial set of numbers, to provide a ballpark idea of what it would, what the terms would look like for the scenario they're telling me they would like to have. Then what's going to happen is, once I get their documentation, and then I go through the formal pre-qualification process, including pulling their credit report, I'm going to immediately go back to them if there's going to be a change triggered from what I initially gave them, and then give them another worksheet and say, okay, I got everything here, and you can still qualify for this loan amount for this purchase price, but your credit score, as I mentioned earlier, isn't quite what you thought it would be. So guess what? Here's a revised worksheet, not an LE. So now you have a better idea, or even better idea, what the terms are going to be, because I now have your actual scores, which are critical to determining how the loan is priced. And by the way, that can work both ways. I've had cases where they'll say, oh, I think my credit score is only 698. So I'm worried that I'm not going to qualify. And then I pull their credit and I find out, well, no, you're not 698, you're 764. So your pricing on your loan is going to be a lot better than we thought initially, because the score you gave me turned out to be too low, which, by the way, that can happen fairly often, because most consumers, they have a sense of what their score is, but it's usually from sources that are not directly related to mortgages. They'll get it from Credit Karma or from their credit card company, and those scores use different scoring models than mortgage credit reports. And so there can be a variance from what the consumer thinks their score is based on those other sources versus the 3-bureau mortgage credit report that we pull.
Art, before we move on and wrap things up for today, I'm just curious, is this, the fact is that, hey, you sit down and counsel with people, you give them something that tangibly they can look at and help them make a decision. Is this a knockout factor if I do go to a lender and we don't go through these steps? That maybe it's like, I'm not saying they're not a good lender, but it's like, wow, I'm still in this fog when I leave those lenders who don't offer that. Could that be a knockout factor in your estimation?
Well, I think that's a personal decision. I mean, now people would argue I'm biased. I'm an originator. So they're going to probably expect me to say, yeah, that's a knockout blow. Why would you deal with that lender if they're not willing to give you at least some semblance of initial indications of what the numbers are going to look like without forcing you to submit a formal application and provide, all your documentation first? I personally think that's a knockout blow. If it were me and I'm getting a mortgage, if I can give you those basic parameters that I desire and that I think I meet, if you're not willing to give me, essentially a price quote, I don't think I'd want to do business with you, because you're pulling me into the process without being fully informed, at least as to what could be possible. To me, that's a deal breaker. I'm going to go to the next one who is willing to do that. Now, not everybody thinks that way. So I'm not going to say that thinking you're still okay to work with that major bank who doesn't want to give you anything in writing until you submit an application and send them 100 pieces of paper. I'm not going to say that's wrong necessarily. I just don't think that's advisable. I think you're always better off get a pretty good idea what the numbers are before you get into the formal process. I only think that's fair, and I think it's more reassuring to that borrower, and it helps manage, frankly, their expectations.
Well, before we go on to the next piece, I want to put your information on screen because, first of all, you have a 1% broker fee, which, as we said earlier, that could save money, and it makes a big difference in rate of how you as a lender gets paid from the broker, or excuse me, from the lender. And then also the fact that you offer lending. I know you said we're here in the Coachella Valley, but what is your territory? Where can you actually make loans?
Actually, a good question. We make loans all over California.
Okay.
We're a California DRE licensed mortgage broker. So as a consequence, being licensed in California, I can make a loan anywhere in California. In fact, I have a purchase loan in process right now, and it's on a new construction condominium in Morgan Hill, California, which is in Santa Clara County in the northern part of the state. I closed a refinance loan a couple of months ago in Weaverville, California.
I don't know where Weaverville is.
Yeah, that's also up in Northern California. So, and we do loans, and I closed a private money purchase loan on a condominium in San Diego here just recently. So, anywhere in California, we can help a borrower, either a homeowner who's looking to refi or somebody looking to buy a home. So that's our territory.
Well, the reason I brought that up is, if I'm a real estate agent and I sell here in the Coachella Valley, I'm probably not going to sell in another area only because I lack local market knowledge. Is that such a critical factor when we're talking about lending?
I think it's less so. Although, we do run into that a little bit in the Coachella Valley, for example. One of the things about the local real estate, licensees here, they'll get worried if they're, say, have a listing, in Palm Springs, and it's on Indian lease land. And the buyer who comes in to make an offer is using a lender in LA, who boasts that, hey, no problem, we can do lease land. We're fine. We can make this loan. And then at the 11th hour, the listing agent finds out that no, that LA lender can't follow through and make the loan because they don't understand the Indian lease land process. So there is some of that can occur. Over my years of experience, I've got experience throughout the state of California, so I understand things about Northern California. Like, for example, they don't have independent escrow companies. So how the escrow and title process works up there is a little different than down here. I'm familiar with that. But yeah, you're right. I mean, a Palm Springs realtor generally is not going to try to list and sell a home in San Francisco. In most cases, they're going to refer that, if they even have that opportunity, they're going to refer it to a local agent and usually work out a referral fee. Lending, that's less needed, but in some cases, depending on the local market, like ours here in Palm Springs, where we had that Indian lease land, that's very unique. So having a local lender here for that type of property is going to be to your benefit in most cases.
Well, if you're just joining us, what we've been speaking about today is really kind of setting the expectations. If I'm somebody who's thinking about buying a home and I'm coming into a lender, what can I expect as far as that interaction, and what can I hope to get from that, and what is kind of the norm versus how Art does it at MortgageWorks?